Coca Cola's story is a story of success that began more than 130 years ago. A story that changed my life as an investor. I have owned more than 400 million shares of the company for almost 35 years. I have no intention of selling a single share because when I own parts of great businesses with great management and competitive advantages, my favorite holding period is forever. In today's video, I want to share with you how I have multiplied my initial investment in this company by more than 24 times, making it my best investment so far. Don't forget to subscribe to InvesTube channel and click the like button if you like this video. Before Coca-Cola, Benjamin Graham influenced me to only buy things on a quantitative basis, to look for cheap things. I was looking for what I call cigar butts. This approach was to invest in companies that were on their last days, but still had one last puff left in them to take advantage of. In spite of making money doing it, what I did for years was a mistake. Fortunately for me, a few years later I met my partner Charlie Munger, who convinced me that looking at the qualitative side of companies was much more interesting. He taught me that it was much easier to make money buying a great company at a fair price than buying a fair company at a great price. My investment career was transformed by Coca-Cola when I reflected this change in my investment style. The year 1988. I decided to invest in Coca-Cola through Berkshire Hathaway in 1988, and within a few months we acquired more than 6% of the company's outstanding shares. I continued to buy shares of Coca-Cola during next years, investing more than $1.3 billion. Coca-Cola had a market capitalization of about $16 billion and net profit of just over $1 billion when I started buying stock. So it was trading at about 16 times earnings and 5 times book value. It was a risky investment for other people. One of the main reasons that prompted me to make Coca-Cola one of Berkshire Hathaway's largest positions was the attractive price at which the stock was selling it in 1988. On October of 1987, just a few months before our Coca-Cola purchase, the S&P 500 had fallen 20.5% on what was known as Black Monday. Today I believe it is still the largest daily drop in an index ever recorded. There were several factors that contributed to this drop, including overvaluation of stock and excessive speculation in the markets, which was part of a global financial crisis that affected markets around the world. Due to this, Coca-Cola's shares were incredibly depressed. Against this tough economic backdrop, our decision to invest in a company that was considerably expensive at the time, a completely different investment from what our investors were used to, drew a lot of criticism from the general public. It wasn't a typical Berkshire investment. This was a different investment both for me and Berkshire Hathaway. We had never bought anything at such high multiple, and it was a different type of company than we were used to. During the first few years, I had to convince investors that this investment was worthwhile. Charlie Munger and I wrote the following to Berkshire Hathaway shareholders in one of our annual Berkshire letters. In 1988, we made significant purchases in Coca-Cola. We expect to hold this value for a long time. In fact, when we own parts of great businesses with great management, our favorite holding period is forever. Why Coca-Cola? Well, as a result, instead of trying to make a big return in a short period of time, I adopted a long-term strategy and considered the fundamentals, quality, and hidden values of the brand. From its inception, Coca-Cola expanded rapidly in the United States and began exporting to other countries. During the 1920s, the company was already a symbol of American culture and became popular around the world thanks to its innovative advertising campaigns. In 1923, more than 1 billion bottles of Coca-Cola were sold each year worldwide. Today, it is estimated that more than 1.9 billion drinks are sold every day. In the last 40 years, the company's sales and profits have grown very healthily, overcoming the major crises that have occurred since then. Very few companies are able to achieve this over such a long period of time. Coca-Cola had a simple product from the beginning. As soon as Coca-Cola established its worldwide production and distribution network, it no longer had to invest large amounts of money in generating its product. For me, it was an easy business to understand. Since the 1930s, the company has developed immense brand power and become an American symbol. People love the brand. In 1988, I was able to realize that the competitive advantages of this company were too great for any competitor to match. No other company was going to come along and take market share away from Coca Cola. On the contrary, the company has steadily absorbed and bought out potential competitors over the years, and it has now become a highly diversified international brand with more than 500 products in its catalog. My prediction is that they will still dominate the soft drink market, not losing market share in any way and growing over time. I think it will happen for many more years to come. I don't think the overall market share of Coca-Cola products has ever been higher than it is now, and I don't see anything that will change that in the future. It's a huge distribution system, a huge producer, and a brand that has been getting into the minds of more and more consumers since 1886. On the other hand, precisely because it is such a deeply rooted brand in society, it is able to raise the price of its products without affecting demand, thanks to having a high pricing power. No matter how much a can or bottle of Coke costs, someone who wants a sweet soda will still buy it, even during a recession. And thanks to having a large volume of stable daily sales, 1 cent more per drink would already represent about $20 million extra every day. Today investment. Since the first purchase of Coca-Cola stock, I have not sold any of its shares. The company's stock since 1988 has risen more than 2,400%. We currently own 400 million shares, which is 9.25% of the company. The $1.3 billion investment in 1988 is worth more than $24 billion today. And annually through the dividends offered by Coca-Cola, Berkshire Hathaway generates cash flow of $700 million each year. This is a huge amount of money. Find the next Coca-Cola. In investing, you don't have to invest in thousands and thousands of companies. You just need to invest in a few that make sense to you. When I met Bill Gates in 1991, he said, "You have to have a computer. You can do your tax on it, or track your stock portfolio." He said it would change everything. And I replied, "Will it change whether people chew gum or drink Coke?" He said, "Probably not." And I said, "Then I will stick with gum and Coke, and he will stick with computers." By this, I mean that I do not have to understand every kind of business. There are thousands of opportunities out there. The Coca-Cola case demonstrates the importance of investing in companies with strong brands and dominant market positions, as well as the importance of adopting a long-term strategy and trusting in a company's quality. If I see something I understand, like Coca-Cola, and I like the price it is selling for, I will swing. The most important thing in investing is to wait for the right opportunity. And when you think you are looking at an opportunity of a lifetime, like in my case, you must swing with consistency. Don't forget to hit the like button and to subscribe and activate all the notifications of this channel. See you in the next video. Greetings and good investments.